Hi, so the idea over here is to, kind of not show any PPT as all. I mean, usually I have only 3 or 4 slides, but this time not even one slide, and take you through the Excel model, take you through websites, Morningstar, Value Research Online, to show how people show returns on mutual funds. And more than the mutual funds, I actually intend to cover the direct stocks, because mutual fund, somewhere someone is, kind of calculating the returns, be it CAGR, be it absolute returns, some returns. Not XIRR, although. But for direct stocks, obviously, it's your own portfolio. I don't know how many of you would be doing direct stock investing by yourself, but you keep on investing and you keep on seeing that, okay, I invested this much, this is now worth that. But have you beaten the benchmark? And if yes, then what is the alpha you have generated? Is it only 2%, 3%, or is it like 10%, 15%? Are you comparable to a mutual fund manager, or maybe a good PMS fund manager or a hedge fund manager? So all these things you need to, kind of look by yourself, and then can pat your back if your alpha is great, because you are there then, right? You have a right. So you can also manage other people's money also. You can say on LinkedIn that, okay, I have generated X amount of XIRR, because if you say that I started off in 2007 or 18, let's say, and then now in 4 years, my portfolio is this, but you have done a lot of transaction in these 4 years. How to calculate about that? Anyways, let me now come to the mutual fund. So let me share my screen first. Sorry, I hope you can see my screen. If anybody can just ping on the chat or unmute and reply. Okay, great. Thanks, guys. So, guys, obviously, you know that Morningstar and Value Research Online are the two great databases for mutual fund tracking the returns and all. So, I just thought, let me open Axis Blue Chip Fund Direct Growth Plan, which is one of the large cap funds. In this sheet, through these examples and through the Excel, I have tried to cover each and every scenarios. When are you exiting? When are you SIPing? When are you, putting in more into lump sum? All these things have been, or when are you withdrawing? All these things have been taken care of. One fund per each example I have taken. So if I have missed any scenarios, please do ask in the chat later on after we finish up. This, as I said, this is going to be a shorter session today, not a 1.5 hour kind of. So this is what performance in this tab is, but let me also share with you. Okay, can you see this return sheet? Now, this is my own return sheet. Nobody shows their own returns, but this is my very first investment I started doing back in 2011. When, probably I started my first job and then first SIP. So if you see, there are two funds I was investing into. Which is a HDFC Flexi Cap Fund. And now that was called HDFC Top 100, I guess. I don't remember the exact name, but now it has been renamed to Flexi Cap Fund. And the other one was ICICI Prudential Value Discovery Fund. So I did 14 SIPs of 1,000 each in HDFC and 13 SIPs of 1,000 each in Pru Discovery. Why I stopped? Because then I joined my college, joined MBA, and then obviously there was no salary coming in, so I had to just stop. But I never withdrew it, and I don't think so I'm ever going to withdraw this 27,000 investment, which has now become, if you see the current value, which has now become 1,34,982, because this is just a token of a reminder kind of a thing that, kind of how I started and probably where I'm going. How I am doing in my life, or certain sort of thing. So if you see, I started off in September 2011, if I remember well. So it has been almost 11 years now. Now this, the kind of report which is generated by someone, kind of my relationship manager. That time I was doing a regular fund. It was not a direct fund. I did not know about what direct fund used to be back then. So someone introduced me to this guy, and kind of he pitched me, and then I was like, okay, let's start something. So you see, what do these guys show in their monthly report? I think they show monthly or bi-monthly. I have forgotten that. But this is how most of these relationship manager or these companies will show you returns. They show you the amount you invested into, and then obviously the number of units you have invested in. So 55.687 have been the number of units across those 14 months where I got. Purchase price is something, the average price which they have, kind of taken, 251.4052. And then the current price is nothing but the current NAV, 1101. Now current value is obviously 1101 into Number of units, 55,687. The current value is 61,339. No dividends because it's a completely growth fund. Gain is nothing but current price minus the, current value minus the amount invested. Now look at the last two columns. They will show you the absolute returns and the, last and the third last. So absolute returns, days is anyways, we'll use that later, and CAGR. Now, what is absolute returns? Absolute returns is nothing but your total gains divided by your total investments. So it will be 47,000 divided by 14,000, and it comes out to be 338%. But is this useful for me? Like how I said that I'm going to never sell this fund, even if I look at it after like about 20 years, 30 years, this number might be like 1,000%, 1,500%, but does it make sense? It does not make sense to me at all. So this column is a waste for me. 338 looks great, but useless. Then you come to CAGR, 15.22%. Now CAGR actually shows you the investment which I did in the first SIP and what that first SIP is actually, kind of come to today. If not first SIP, it might be last SIP. I don't even know, but it shows me 15.22%. I will see this. I'll become very happy. Okay, 15.22 is a good percentage because in the large cap kind of a fund, we believe that 10 to 12% is great. But I have not invested it over 11-year cycle period. That is also one thing which you need to remember. ICICI Prudential Value Discovery. Again, if you look at the last group, it has outperformed on the basis of CAGR. The HDFC Flexi Cap Fund, 18% is great. It's superb because I remember back then ICICI Prudential Value Discovery Fund was doing amazing for I think 3 or 4 years. It was one of the best funds till 2014-15, but because I never withdrew it, so it just kind of kept on accumulating. They show debt percentage, equity percentage, because both are equity fund. Debt percentage would be the cash holdings. I would cash or cash equivalent, not much useful for me. So just remember this, kind of this snapshot, and let's go and see how these websites will report you the return. Now websites generally, so I am on Morningstar. Now they will show you the percentage. If you go to the overview tab, so overview, sorry, my net is a little slow today. So overview tab will show you, kind of all the gyan, like which are the companies which they hold, and what is the turnover, etc., etc. And on a very high level, they will show you some kind of a returns. Returns are basically in the form of graph over here. But if you go to the performance tab, where I was anyways initially, so performance tab will show you the returns year on year, that what they have generated in say 2014, 2015. So investment is like this row is the returns, 42.67% minus 0.25%. These are the yearly returns. But this is it. They won't tell you what is the CAGR of the fund from the, and they might have somewhere, kind of told what is the CAGR since the inception and all. But let's look at Value Research Online, which has improved their UX a lot in the last, probably, I think they changed it 3 or 4 months back. So I was just checking this Edelweiss Greater China Equity Offshore Fund. So look at this tab. So basically they tell you calculate SIP returns. Now, one thing before I move to this part is that was generally, and if you have been following me on LinkedIn and elsewhere, I always say that investment into equities should always be through SIPs, right? Because that takes the burden of timing the market, which nobody can. And if you keep on doing SIP on a particular day of the month, or let's say even weekly, so you need to calculate the SIP returns. Now, if you are investing in some fund for, let's say, over a 3-year period, monthly, there would be 36 installments. Now, first installment completes 3 years, that is 36 months. Second will complete 35 months. Third will complete 34 months, and likewise. So CAGR obviously doesn't make sense, but how you accumulate it and, kind of average it out to calculate the XIRR, which is called XIRR. So, okay, before I go ahead, CAGR calculates point-to-point returns. So if you have an initial date and if you have a final date, I'll tell you the formula when I open the Excel. The final upon initial returns would be n to the power of, kind of how many years it has taken. It is nothing but it is an average, compounded returns on an annual average basis. So in that way, what happens is that you will get that number that, okay, from initial to final, this has been the returns, what you could have generated, or you have this fund has generated in the last 3 years or whatever number of years. But if you have intermittent investments like an SIP, then CAGR is a waste concept. Then you need something which is called extended IRR. IRR is internal rate of return. X is extended internal rate of return, which takes into account all the inflows, outflows, negative, positive, every kind of returns to calculate the exact number what you have been looking for. Now, although this Value Research Online gives you a calculate SIP returns, which is great. This is a new tool which they have, kind of recently come up with, and they ask you upfront investment, kitna hai, monthly SIP amount, what is that, investment duration, and then they'll obviously ask you to calculate, which is what, minus 3.92 it's coming. But what date have you invested into? They have probably assumed some date. If you just calculate return details, they will open something which is trailing returns, discrete returns, rolling returns. Now let's look at what trailing returns is. Trailing is nothing but obviously your kind of a line chart, and it will keep plotting you the returns on a daily basis. And it has plotted from, let's say this is 1 year. So from September 16 to 2021 to September 16, 2022. And this is how they have plotted the returns for this fund, the benchmark they have assumed. And Equity International is nothing but all the funds which are into this kind of a segment by Value Research Online. So they have just averaged it out. Let's just look at it, this blue and green tab. Now, this is what, kind of if you had invested over here, you would have got this. So if you just look at this number over here, so it gives you minus 27.29% for Edelweiss Greater China Offshore Fund. This is CAGR because this is 1 year returns. Even if you click on 3 year, it will give you returns of 6.92%. This is CAGR. This is point-to-point returns. It doesn't take into account any intermittent cash flows or investments which you have made. Now, if you come below, you see return over time. Obviously, they have taken all the time and then calculated. Now, here is what the new feature of Value Research Online has come in, where they say calculate SIP or SWP returns. SWP is nothing but systematic withdrawal plan. And then they ask you all these basic details and then calculate the returns, which they have calculated as minus 3.92%. Now, if you look at the CAGR of 3 years, 3-year CAGR is 7.33%. But on the basis of SIP, the XIRR would be minus 3.92%. Why? Because recently the fund has underperformed a lot, and you just look at it, it is underperformed the benchmark as well. However, the thing is that if you look at the boxes where I am just, kind of traversing, they've always taken the date as 17th because today is 17 September. Now, if you come to this tomorrow, you will find different rates because it will take 18th of each month as a SIP date. So that's just an assumption. So if you are investing on 1st of every month, then if you are following this website, you have to come on 1st of every month to see what your actual returns have been. And then you can, kind of accordingly input the number of years. Now, the interesting thing is that they have only given you how to, kind of enter the number of years. And I don't think so that if you give you can't give even a decimal number. So you have to, kind of input the complete year number. What if you have been investing for past 2.5 years only? The point is that it is difficult to make these kind of tools, and you have to do it by yourself. Now, I hope you understood what is the difference between CAGR and XIRR. I'll just show what these different tabs are also meaning, and then we'll go to the Excel. So discrete returns, obviously, I really like this concept whenever I am analyzing any, kind of equity or even equity mutual fund mainly, that every year, how have you performed, because sometimes what you say is that CAGR just averages returns over the period. So let's say if you're looking at a 5-year CAGR, what if you have given a great return in the first year, but in the subsequent 4 years, you have underperformed? Like great return, I would say even double ho gaya, like 100% return in the first year and then maybe 5% in the next 2, 3, 4, 5th year, even negative returns. CAGR would be great. But ultimately, my point is that there was no point holding this fund from year 2 to year 5, right? Because it has massively underperformed, maybe the benchmark, just assuming. But 5% is not great if the benchmark is doing great. So I need to look at the outperformance year on year, whether they are doing it or not. Now, if you see Edelweiss Greater China Fund, it was just open, so I'm showing 2014 underperformed, 2015 hardly any return, 16 underperformed, 17, 19 and 20 is a massive outperformance. But even 2021, it has underperformed the S&P BSE 500 TRI. Now, one question would be that whether S&P BSE 500 TRI index is kind of a real benchmark for this or not. See, international funds have a little tricky thing where will you benchmark it to? Now, if as an Indian, you are investing in some, kind of foreign funds, you will really want to see that whether investing it globally, vis-a-vis investing in India has some kind of a benefit or not. So people generally, kind of take Indian benchmark only so that they can know that yeah, investing into India is much better than investing into maybe China or a US or any other kind of economy. So this benchmark is okay for me. If you look at Axis, kind of blue chip fund, this would be S&P BSE 100. Now S&P BSE 100 lena hai ya 50 lena hai, that is something which, kind of the AMC and the scheme only decides, and they will, whatever they have asked, they would have put, वो यहाँ पे benchmark उसी तरह से यहाँ पे benchmark आ जाता है. Okay, now after having seen what is rolling return, rolling return is nothing. This is a premium feature, but I'll explain you what rolling return is. So discrete return is obviously from 1st January to 31st December. Rolling returns will calculate you. They will take, let's say, 3-year average rolling return. So you will, kind of from today, 17 September 2022, you go back to 17 September 2020 or 2019. And from there, you will go back 3 more years. And for every that kind of, from 17 September 2016 to 17 September 2019, one return, 17 September 18 September 2016 to 18 September 2019, one return. So accordingly, just calculate the 3-year return rolling average period. So last return point would be 16 September 2019 to 16 September 2022. Just average all of it and then look at the rolling returns. Generally, it is assumed that, kind of mutual funds have, I think, 7-year cycle where they, if you look at over 7-year period, I think 90 to 95% of the mutual fund schemes have never given a negative rolling return. Means 7 साल invested रहोगे तो negative return तो कभी होगा नहीं, कुछ ना कुछ positive होगा. Now whether that is beating the benchmark or not, that is not a guarantee. So, okay, having said that, let's move on to look at the Excel. Any questions till now over here, or I'll take the questions later on only once you understand this this Excel. Now, most of you would have seen this Excel already. In the next 20 minutes, I just want your extreme concentration on this because there are a lot of numbers, lot of formula. And if you just follow this properly, I think you will be able to make a great Excel for yourself. And obviously the video will be there, so you can just traverse it through and you won't be forgetting. So don't take notes or something. Now, what I have done is, this is a very dummy data. I mean, data is real, but I have just taken some funds from, kind of from a lot of places. I mean, just out of like how a great portfolio might be. I mean, equally asset allocation basis, what a good portfolio might be looking at. So this is a summary sheet. Now, what I have done is, for each and every mutual fund, I have created different tabs. So for example, Axis Liquid Fund. Now, as I said, each and every fund has a different, kind of a characteristic, because this is an example to show you. Now, Axis Liquid, what this example has taken, and when I will say what I have taken, means it's not my portfolio. Again, this is not a recommendation that you need to invest or replicate this kind of a portfolio, but just for example. So what happens is, see, first investment has been done on 21st January 2020, but it's a sum invested is negative 1,38,000. NAV, I have just mentioned over, it's a hard-coded number. These two numbers are hard-coded. Unit purchase will obviously this divided by this. This is a negative sign because obviously when I say minus in sum invested, that means I have invested that, and when I am withdrawing it, it's a positive number for me. Cash outflow and inflow concept. I have made some more, kind of information tree tab for myself, or column for myself. Folio number, I have removed the folio numbers, of course, because there's no folio number in reality. But you should mention a folio number so that you can, kind of keep it for a record. Is it a tax saver fund? How is it invested through? Are you investing it into a direct mode, or you're investing into a regular mode? If regular mode, either through your broker, let's say my broker used to be GOG, some RM based, or all these kind of things, you can write it so that you don't forget after 20 years, yaar wo paisa kahan gaya. So this is kind of a record which you are maintaining for yourself, and it is saved on your computer. So you're not sharing your data with the third party. See, you can make use of all the third party apps and all. I'm not against that, but if you are a little, kind of skeptical, this is a great record for you to maintain over the period of your lifetime. So each and every transaction I do, I just record it over here. It doesn't take much of a hard work. Even if you do it on a fortnightly or even a monthly basis, just sit for 2 hours, 3 hours each, kind of end of the month. Or if you're doing it maybe weekly, maybe sit for half an or 15 minute, 20 minute every Saturday or something. So I do it every weekly for myself. I sit every Saturday or even Sunday, and whatever transactions I have in the last one month, probably I will have, last 1 week, I will put it over here. Now, this fund says that, okay, I invested 1,38,000 at itna NAV. I got so many units. And then just look at this. This is a weekly SWP or STP, sorry, STP. So I might have, kind of set up an STP so that every week or starting from 12th February, some to 20,000 rupees was going and getting invested into something else. I think that was what in this example, it was getting into this Axis Midcap Fund. Just concentrate. So 20,000, because it is going out from this fund, is a positive number. What NAV? How many units you have actually taken out? Now it would be negative because it is, kind of units are going out from my fund. So accordingly, I have made all these numbers over here. And finally, I think after 18th March, this example shows that 19th March, if you remember 19th March and was what? COVID crash around those dates. So I think more money was transferred into this fund, 70,104. Now this fund actually came, this kind of a weird number comes because maybe some equity fund would be liquidated and moved into liquid fund. So that, kind of more exposure toward debt funds because the COVID crash was anyways there. And then on 10th November 2020, someone is not on mute. Can you please go on mute, guys? Thanks, sorry. So on 10th November, extra 92,000 was invested. Now, what to do with this data? Now, if you come down, now this can be, kind of made very dynamic, but I'm not getting into the core Excel or, advanced Excel sort of things. It has been explained in a very simplistic Excel kind of a model. If I'll just go down to row number. So I've created these row number 149 and 150 in every sheet to calculate the XIRR. Now, if you see what I have done is that this is equal to the summary sheet C2. What is C2? Basically, here I update the date whenever I am updating the sheet so that XIRR can be calculated easily. That means I have today's NAV and all the recent NAVs and the investment amount, whether it is an outflow or the inflow. And that is why I can calculate the NAV easily. So this is equated to there. Now, what does this say? F150 into H150. That means what are these two numbers? These two. So what is 81.28? 81.28 is sum of F3 and F149. What is that? Basically the unit purchase. Now, because unit purchased are positive and negative, they will anyways balance it out, cancel out. And whatever current number of units you are holding in this mutual fund will be calculated over here. So today I am holding 81.28 units of Axis Liquid Fund. What is this 180,104? This is sum of all the investment amounts I have done, outflow or inflow. So this is, if you see the formula, this is D3 and D148. It does not take into account the 149th row. What is 149th row? Now it can be easily. So what is this 2414? It is coming from summary D5. What is into summary D5? Summary D5 is nothing but this number. Now, this is the only number. This is the only, kind of a column which I probably have to update whenever I am updating the sheet. This is the latest NAV. This can also be if you're making the sheet in a Google Finance, I think this can also be pulled from Google Finance formulae. I prefer, as I said, I prefer doing it on Excel. So I just, kind of manually put in all the numbers from here. Where do you get all these NAVs? You can take it from Value Research Online, Morningstar, or Money Control, or you might also create some portfolios on, let's say, Money Control and all, where every NAV you can, kind of whatever you have inputted, you can see the daily updated NAV on portfolio tab of Money Control, or there are various websites where you can track this number. Let's say I have, kind of come to this number and 2414, I have updated it over here. This is a hard code number. And this goes as a formula. This equals to summary into, just keep a tab on the formula bar above. This number has been pulled from the summary tab. And finally, this number 196,234 is nothing but the latest NAV multiplied by the number of units. So today my 180,104 has become 196,234. And how do I calculate the XIRR? Now, this is very important. XIRR formula, if you see above in the tab, XIRR says, if I just write over here, XIRR, you will get the hint. Just take all the values, I mean, as an array, comma, all the dates, and just a guess value. Guess value is not important, but you can put it over there. So what did I do over here? XIRR of D3 to D149. So all the inflows, outflows, and today's value will also be there. So that if I liquidate it today, I am getting, so this 196,234 is something which I have, right? So I need to take into account those dates as well. I mean, today's date as well. So that means all the values right from first investment to the today's value, comma, B3 to B149, which is nothing but all those dates where I invested and today's date, and then just a guesstimate, which is a 5%. So it gives me 3.87% as my XIRR for Axis liquid fund since the time I have invested into. This can be compared by CAGR of Axis liquid fund, which would mean that it starts from 21/1/2020 till date. The number would be different, and I'll come to another example where I'll kind of probably show this. And you can also compare it with the benchmark to see whether you have invested into a fund which is outperforming or underperforming. Now, another example is this Axis Midcap Fund. Now, why don't I trust these websites? Or not trust, but why don't I go with them like a value research online? Because it gave me just like initial investment value, bata do, SIP bata do, number of years bata do, ho jayega. But if you see this example, I invested 9,000 rupees in this fund on 6 January. Then I invested 35,000 on 27 January. I mean, I can invest, it's not an SIP, it's lump sum investing whenever I want to. I mean, I saw market down today 3% or 4%, or I might have got a bonus or something. And I know that, I can invest across some mutual funds. So maybe on 27 January, I invested 35,000 in this. Then I started off doing an SIP, weekly SIP, which I showed you that 20,000 was coming in from Axis liquid fund as an STP. Maybe 5th March, I invested extra 9,000. If you see this through Zerodha or through direct, I mean, there are two ways where I'm investing it through, either Zerodha coin or through direct, and the folios number will also, kind of differ depending upon where I'm investing from Zerodha or direct fund. And now all these values are, you see 20,000, 20,000, and then the SIP got stopped. And on 6th July onwards, I again started doing an SIP of 5,000, for example. And on 10th June, I withdrew 75,000 from this fund. Maybe for whatever reason. I mean, theek hai, ho gaya, market ka kafi returns aa gaya. So let's say on 10th June 2021, I withdrew 75,000. Same example. I mean, I calculate the number of units purchased, negative and positive. Obviously, this is going to be the negative because I have, kind of sold 1128 number of units. And if you go below, again, same thing. 16th September date is coming from the summary sheet. This is going to be your NAV. Now, current recent NAV as of yesterday has been 78. This is number of units which I currently hold even after selling those 1,400 units. This is the investment value I have put in for this fund. And then I can calculate the XIRR in a similar fashion. And XIRR for me, for Axis Midcap Fund is coming to be 26.69%. I just need to go back to some websites and see what has the benchmark given. And then I can compare my fund, whether it is more than the benchmark or not. So that's again, one more example. So this again, same thing, like a Bharat bond, 4 times investment, I think 14th investment. This can be clubbed as a -3 lakh also. I don't know why I have put in a separate tab, but the idea probably would be that even if the dates are same, the XIRR formula will calculate it, kind of considering same date or different date. So it does not matter if the dates are same. Now, let me show you, probably we can pick up any fund. We can pick up Edel China only. So Edel China, what it shows is that from 4th May 2020, this has been the kind of investment which has been done. Right. Or wait a minute. So if you remember, guys, I was showing you this sheet. So ICICI Pru Value Discovery Fund has given me 18.04% CAGR. Now, why don't we just see if I calculate the XIRR for this sheet, what it shows. So let me just show you iPru Value Discovery. So these are some real numbers which I have put in over here that through RM I have invested into. Let's calculate. So now if you look at the dates, consider that I stopped my 1,000 rupees SIP on 25th September 2012. And this was a monthly SIP, as you can see. The dates differ because obviously it might be a weekend or something. So on 25th September, I stopped my SIPs and then I resumed my SIP into Value Discovery Fund from 13th May 2016, probably when I would have started working, or I started working in 2014, but probably I found that this fund was again doing good in 2016. I again started investing, let's say 4,000 SIP and then increase it to 10,000. But let's only look at these numbers till 2012 because we need to just compare that. If we just put in these numbers over this is the relevant numbers. So this is my sum invested. This is my NAV. So NAV I don't need over here as of now. So let's do this. I'm just showing you while, kind of on the live basis. So this has been my investment. Now, how many number of units I have actually got is calculated from this number. So these are obviously in negative because these are the units which I have. I'll show you why I'm saying so. What is today's date? So assume that only these investments would have been done, right? Only these 13,000 rupees investment were done. Total number of units I would have purchased in this period were 280.84. It should actually match somewhere over here. 280.84. Yes. So this is the real number. Right now, what is today's NAV? Today's NAV we can look at from, I just updated this sheet, 260.47. Okay. So what is the total amount which I have in ICICI Prudential Value Discovery Fund today is going to be my number of units into the NAV today, which is 73,150. What is the date today? Today's date, I can again equate it to directly 16 September 2022 has come. Now, if I had to calculate my CAGR, so CAGR would have given me 260.47. Oh, sorry, 260.47, which is today's NAV, and I would have taken this NAV, first NAV, 44.79. On the CAGR basis, I would have got this divided by this. I'll show you one more thing, something which is called how would you calculate the number of years? So you should use a formula which is called year frac. Year frac gives you start date and end date. So my start date of this fund was 21 September 2011. My end date was 16 September 2022. That's it. So this comes under the, okay, let me just use the format properly. And this is like 10.9861 number of years. Obviously on 21st September, which is like 4 days later, I'll complete 11 years into the first investment into this fund. Now, what you do over here to calculate CAGR is final NAV minus initial NAV, and you can calculate basis NAV because it does not take into account what is the investment amount you are doing, to the power 1 divided by year frac. So number of years, 1 divided by number of time period, number of years, which is this, and minus 1. So 17.38% basis. तो मेरे को यहाँ पे CAGR मिला है if I consider from the first investment. What is the XIRR I have got? Because I have done all these intermittent cash flows, so I calculate XIRR as all these values, which is the inflows and the outflows, comma, which dates these inflows and outflows have been made. And I can put in a guess percentage, and even if I don't put in a guess percentage, it's okay. And it gives me 17.90. So guys, basis XIRR, I have done much better if you calculate it from the first investment date. And if you just see that, kind of I stopped all the investments over here and then I restarted it, and then I invested more and more. So 4,000, then became 10,000, then became 15,000. And then in 2018, I stopped and I did not withdraw. For example, what is the XIRR? The XIRR has fallen down to 15.15% because obviously I invested higher amount. It also takes into account of amount. Did you see CAGR did not take into account the investment value? Or you can even take the investment value into the picture as well. If you had only considered 1,000 rupees, what it is becoming 21st September 2011, 1,000 rupees, what it would have become today. We could have easily calculated. It was nothing but units purchased 22.33 into what is the current NAV. And current NAV, we can take it from this 280.84. So this 1,000 rupees became 6270. I mean, it has grown by 6.3 times. But if you will do this calculation again, it will give you the same number. So you'll get to know that why, kind of it is. And we have to just take this as a negative value because it is already written as a minus 1,000. So this to the power 1 divided by year frac, which is this number, minus 1. Sorry. So this gives you, okay, this gives you 18.13. So I need to figure out that why, because, sorry, this is number of units I have taken into account. So this is going to be your NAV. So I have just taken into account number of units. Sorry, guys. So basis NAV, so this 1,000 actually became, no, I guess, guys, there's a mistake which I did over here. So right now I have calculated fine. This number is fine. So let me just again come back into this number of units which I got on 21st September multiplied by the, okay, because I took the wrong number. I mean, in the chat, I guess you guys, So nobody has written that I was doing any mistake in the chat. I was just guys, you have given some solutions over there. Let me look at it after explaining this. Guys, this is the current NAV. I just took this NAV to 80.84. So let me just get all the values. So this would be 1000. Current value is 22.23 into current NAV, which is 5815. It was not 63,000 something. And then you can do this upon, again, we can do the same thing which we started off with, to the power 1 divided by the year frac minus 1. And it will give you the same number, which is 17.38. Now the calculation is correct. So what I was saying is that XIRR gives you a higher rate of return for this, kind of this investment. But when the values increase, so I was saying that because the investment amount is higher in the subsequent years where the NAV has been higher and the recent performance has been not as great, that is why my XIRR has fallen down to 15.15%. Now, what did that report show? 18.04% basis the CAGR. I don't know why 18.04% is coming, but if they had taken the first investment value, it should have come at 17.38%. They might have taken the last value or whatever. That is why I am saying I don't trust that number at all, and I want to calculate it everything on my own. So this is one example where you can see how calculating XIRR is different from calculating CAGR, or even calculating absolute return doesn't, kind of matter to me at all. I think one or two more examples, like for example, Kotak Arbitrage Fund. What I was doing over here is say that I invested 2,90,000 over here at some NAV unit, purchase this and that. And then I started again doing some, STP over there. This is same as Access Liquid Fund basically. And then on 22nd July 2021, this fund did not have any more, fund more than 3,000 remaining. So I withdrew everything on 22nd July 2021 at 4163. Now, how will this number be calculated? Now, just look at the normal calculation. So this is a hard-coded number, right? Which is the number sum invested. This is the NAV, but this was being calculated as your sum invested upon NAV. Now, in the last row, when the entire fund is going out, we just look at it as that whatever the sum of this has been, because this is the last investment amount going out. So total finally, what will happen is that total number of units remaining would be coming down to 0, because entire thing has been, kind of sold out. So I'll just see that I had invested 10,460 unit in the first instance. After all these, STPs, what will I remain with? The initial minus the final, and this calculation will give me, if you see this formula, this will give me sum of F3 minus to 104. So this is what is remaining at this NAV will become this, investment withdrawal, which I will take 4163. Finally, the entire fund is empty and I made 5.56% XIRR from this Kotak Arbitrage Fund. From Arbitrage Fund angle, I think, is this good or bad? Again, we'll have to see the different websites and we can compare that whether we outperformed or not. So on the mutual fund basis, I think this should be much clearer now. But the main thing which I want to show is to calculate the returns on your stock holdings. So let me just go to, how do I calculate? And this might seem a little tedious to you, but believe me, over the period of so many years, this has proved a very, very good way where I calculate my XIRR from funds. Now, be with me. I'll take you step by step. Now, what I do over here is that first I type the stock name, purchase date, number of units, although this data is given to me by Zerodha, by my broker, everyone, but nobody will give me an XIRR, proper XIRR to calculate, and over a period of time. And the record is being kept here by yourself. This might seem a little manual at my end, but yes, I am a little finicky in that case. So purchase date, how many number of units did I purchase? Price, purchase, and I generally calculate the brokerage and everything. And then again, accordingly, I write the price over here. Then the purchase amount would be nothing but number of units into price. This is for XIRR. Why I have written for XIRR? Because this goes into a negative number. So XIRR is nothing but minus of the purchase value. I just calculate an FY also, because tomorrow if taxation thing, long-term capital gain, short-term capital gain kind of, kind of requirement is there for myself. I know which fiscal year is being calculated, and just look at the formula. I've calculated the fiscal year, because for India, it's not January to December. So I need to calculate that if it is January, February, March, the fiscal year is this year only, the calendar year. Or if it is from April to December, it becomes the next year. Anyways, and cumulative number of shares. So this is important, because many times what I do is I don't invest lump sum into any stocks. Again, this is, kind of not my entire portfolio. This is for example, and I've removed a lot of things as well for easy explanation. So I keep on investing 1 share, 2 share, 5 share, 7 share, time to time, 10, 20, whatever. So lump sum calculation won't be, kind of making sense. So I have to calculate this column, which is called a cumulative number of shares. I'll show in Reliance how I have, kind of manage this kind of a one stock portfolio. Now, what happens is whenever I'm purchasing any new share, I will also make a column over, or make a row over here, make a record over here, that, okay, if I have bought Amber, so Amber will be over here, which micro cap, small cap, mid cap, large cap, I have made a provision over there as well, because I can then easily calculate how much percentage funds I today have in large cap, mid cap, and small cap. Sector again, because I need the sector split as well. Number of units is being calculated from, if you look at the formula, what it says is sum if NN B5 PP. What is NN? So if you see that Amber, if it catches Amber, then it will, kind of look Amber in N number of row, and then it will look at this in P column, or you can, so basically if you are looking at Amber, so 3 and -3 becomes 0, because it is sum if. Because Amber I purchased on 26 June 2019 and then sold it off on 1st January 2020, maybe just 3 shares, right? So 3 plus 3 or 3 minus 3 basically will be 0. So whenever this number becomes 0, then I don't have any unit, it will show a dash. What is the total purchase amount? Purchase amount, if the share is already there with me, I have not sold it off, it will be a positive number. But if I have already sold it off, this negative number will be actually my profit from that share. So minus 463 was my profit from, sorry, Asian Paints, but minus 1044 was my profit from Amber. Average cost will be 0 if I have sold that share. So obviously, because if you look at the formula, F5 divided by E5. So, total purchase value divided by E5, because it is an error. So I've just put it in, kind of if error. That means the share is sold off, average cost is 0. Whatever shares I'm currently holding, just like I'm updating weekly or fortnightly or monthly my sheet for mutual fund NAV, I will update my current market price here as well. Now, again, if you are using Google Finance or other tools, this can be, kind of equated through Google Finance formula, but I just type it out, whatever the latest Friday close number is. And the total value is nothing but your total number of units you are holding into the current market price. Loss realized or unrealized is calculated very simply as current total value minus purchase value. Because this is anyway 0 minus 1044, so it would show the kind of profit as 1044. And this I'll come to these points a little later. Now this was Amber I was discussing. Now let's see Balaji Amines, which probably I might have not sold. If you look at Balaji Amines I bought on 10th March, then I bought on 18th, then 25th, then 5th April, then 12th April, just in 5 installments, and only 5 shares I bought, 1 share at these prices. Again, the same, kind of formula. If you look at the cumulative number of shares, now it is 1, 2, 3, 4, 5. Same thing. Number of units will show 5 because there has been no -5 entry or any minus entry. Total purchase would be nothing but total amount because there would be no negative amount. So this is the total, which it would show 8651. Average cost is nothing but 8651 divided by 5. Current market price, I keep updating, as I said, total value will be calculated through formula. This is the current unrealized profit, which I have 9243 from Balaji Amines. Accordingly, the entire sheet, kind of captures each and every investment, realized or unrealized profits and loss. And I've done some conditional formatting. Wherever it is showing me a profit, it is green. Showing me a loss is in red color. Now, this is also, I know that, kind of, even if I want to see, यार मैंने persistent लिया था कभी, या मैंने Newgen लिया था, how will I find the record? मैंने कब लिया था, किस rate पे लिया था, कब बेचा था? I can see everything in just this one Excel sheet. There is lot more data below as well, which I'll come to it later. Let's go to one more share, which is Reliance. So Reliance, in this example has been a little, kind of an overweighted stock. So if you just look at Reliance, or how the Reliance purchasing pattern has been. So obviously you need to create. So the pain point over here is that you need to create each and every row whenever you are, kind of doing any sort of investment, even 1 share, 2 shares, whatever. But if you get into this habit, no, it will take 15 to 20 seconds just to record this at the end of every market day, even weekly. So I generally update it every end of every market day. So रात को बैठे हैं, एक बार देखा क्या है, Zerodha में पूरा detail आ जाता है. Just type in some 2 rows, 3 rows. Not that I'm doing trading and buying and selling 100 shares or 100 companies and all. So see, Reliance, I started buying, let's say on 27 May 2019, 1 share each at this amount. And then on 23rd October, I sold off everything. I sold off the entire Reliance holdings. So it became 0 because it becomes minus 27. Then I started investing again in Reliance on 23rd December, again 1 share. And then now all these dates 1 share have been bought. And last year was bought on 12th April 2021. Total number of shares became 50. And then probably I stopped over there. Okay, enough of Reliance now. And then again, this will entirely capture the total amount, total number of shares, the average price, and kind of current price. I just updated 2499, and the profit is 59,422, which is unrealized profit. Again, the last 2 rows I'll come back to you later. Very interesting point in this kind of a sheet is that when you are kind of calculating the average price, there might be some chances kind of when you're selling off shares, you bring down your average cost. So Tata Power is a great example. So Tata Power, just look at Tata Power's kind of entries. So Tata Power has probably started buying in February 2021, and then I accumulated 120 shares over here till 9th June 2021, and then on 26th November 2021 I sold off half of my holdings. Now I sold at 227, but I accumulated all these shares at 88, 100, 102 and all. So when I just did that, what happened? If you go to Tata Power over here, it takes into account again this the number of shares I currently have. So 120 minus 60, 60. This price will be negative because when I check this, the negative 227 into minus 60 would be higher than my initial investment. So my average investment amount in Tata Power is now negative. So basically whatever 60 shares I'm holding in Tata Power is a bonus to me, right? So even if it goes down to 0, I have made profit in Tata Power. At least 1540 has been booked. Now again, 1540 divided by 60, 25 rupees, negative 25 rupees is my average cost. Current price is 236. This is my, kind of current amount I'm holding. And this is my total gains. Now, because the signs are proper, like negative and positive, and the formulas are correct, it will give me 14,202 plus 1540, because 1540 as a negative, but negative becomes positive, is my total profit unrealized as of now. Right. And then finally, what I will do is, now why I've made these current and rank columns, what I want to calculate is that what stock holds what kind of a percentage weightage in my stock or in my portfolio. So whatever stocks is, kind of I'm currently holding. Otherwise, I'll just delete it out. Let's say tomorrow. Okay, let's take one example. Today, let's say sell off Balaji Amines. Now, how will I make an entry over here? I will just make one additional, kind of shift columns down. I'll copy this so that the data is there. I'll edit the date. Let's say 22. This is what, September 16th, yesterday. And I have sold, let's say 5 shares. For example, what was Balaji Amine share price yesterday? I am just looking at my mobile to find the value, but let's assume it was, okay, I've already opened it. So it was 3578.80, 357. So I could have easily taken it from here only. I just updated it. Okay, so this I have sold off yesterday. So cumulative shares become 0. You just, keep in mind to just copy and paste this as well in the below button, because what happens is it shows an error. Why an error? Because I just added one column. You have to copy the formula as well. Just copy this, won't take much time. Now Balaji Amine shows me 0 holding now. Minus 9243 is the total purchase, which is actually my profit. I will delete this number. I will delete these numbers because it became 0 anyways. Now let's assume I sold Balaji Amines. Now let's look at this portfolio. What I did over here is, if you look at the formula, it's I9 upon I73. What is 73? So at below, I have calculated the total amount which I am holding in my portfolio as of now. This is my current investment amount, which is 574,119. This is my unrealized and realized profit total milake. So this is my investment value. So on 3,14,000 invested value, I have made 574,119. Just keep in mind that most of these shares have already been sold and I have booked the profit. Now, I have just segregated unrealized versus realized based on some formula. I am just not getting into that, but you can look at the formula later on in the tab. But this is my total value, right? 574,119. And this is my, let's say this, 26,538 is my value today from Tata Chemicals. What percentage is it of total portfolio? 574 is 5%. So accordingly, I will calculate all the percentage holding over here. And then I rank them on some basis. What basis? Rank of this percentage in the entire, kind of these 2%, 3%, 4%. So why? Because I can easily make, so I'm making you learn some bit of Excel also. If you're not able to understand, just go back to this video when I upload it tonight and then just hear it back again. So I made this table. What is this table and how is it picking in the form of weightages? I put in 1 as a hard code, and then obviously these are the ranks 1, 2, 3, 4 and blah, blah, blah. You understood how I actually use the rank formula to, kind of pull up the ranks over here for all these stocks. Now I will use index match formula. If you don't know index match formula, please Google, please see other videos. I am not going into that. You could have also used VLOOKUP if the proper, kind of column were there. But in this case, I can't use VLOOKUP because my index number is, a column which is after what I need the data for. So I've used index match over here. So wherever this 1 will be here, so 1 is here, it will catch 1 from there and it will find me the name of the stock, which is Reliance. So depending upon this rank number, I found Reliance over here. And now I can find the weightages also. So this is 21.8% weightage I am holding in this Reliance. If you just make it one decimal place, it is 21.8. So accordingly, this kind of table gets updated. So I hold 18 stocks, for example, today, of which Reliance is 21.8%. Now I can use this persistent is showing 0% to me. It might be a little decimal value or something. Okay. Now see, persistent, I actually sold it off, but I forgot to remove this. So that is why it was catching 18 and then 0%. I can remove this as well. So I have only got 17 stocks as of now. You just delete that. Balaji Amines also got sold. So these are the weightages. Now how I can help with what this data can give me is that was Laurus Labs is only 1.4%. Do I think that Laurus Labs as a pharma stock will do great? If yes, then probably I should invest more. Now this data also gives me, yeah, Reliance, we are holding 22%, no point. Just reduce Reliance, either sell it off or increase your investment into other stocks so that Reliance automatically comes, kind of a little lesser. Similar kind of sheet I have made for sector so that I know which sector I am holding what. This column I actually made for all those stocks which I have sold. So whenever I am selling something, I'll just make a provision over here as well that I have sold that stock. Now what I'll do is, again, similarly, I'll add one row over here. I'll type in Balaji Amines and it will show me 9450, which is my current, kind of realized. So this is just, kind of for capital gains only. If I have realized any kind of a capital gain, short term, long term, I just make a provision over here. So I know kis stock mein mujhe kitna profit hua tha. This large cap, mid cap, small cap, because obviously I am just taking it from, I have just, kind of made a provision. Large stock hai, large cap hai, mid cap hai, micro cap hai. There is one micro cap stock segment also, but currently I'm holding no micro cap. So it shows me 0. I've booked all my micro cap holdings, maybe, let's say. So currently I'm holding 81% in large, 6 in mid, 13 in small, whatever, blah, blah, blah. Now, how this sheet has, this entire thing has helped me. One additional thing is to calculate XIRR. So today my XIRR from my portfolio, right from my day 1 to my day last is 26.12%. How I have calculated this? Because I have each and every date over here, plus each and every the outflow or inflow over here. And current price comes from that 574,119. You would remember that I showed you above that, what's the total current value which I hold as current market prices. So if I just put in the formula, which I can show you here as well, that XIRR equals to all these values right from day one, whatever, minus, comma, the dates. It will capture all the dates right from 2019, 2018, wherever I, kind of started making this sheet. Bracket close, 0, because obviously I have to make it percentage. And then it shows me 26.1236124, whatever. So I know that over the period of 4-year period, 5-year period, my return from my portfolio is 26%. Now, how do I compare whether I've outperformed or not? What I'll do is, because what is the alternative? The alternative would be that probably I would have invested it on that one day, the first day where I started investing share by share, and then look at the value कि अगर मैंने कुछ भी नहीं किया होता, if this active fund management would have not happened and I would just have invested the entire amount at that particular day, first day, and seen कि उसने कितना percentage return दिया है, here I can compare my XIRR with that. लेकिन that value which I am going to calculate is going to be CAGR, because it's I am comparing my performance versus a buy and hold strategy. तो अगर हम इसमें देखें सबसे earliest date कौन सी थी? So what I'll do is that I will try to find a minimum value, because these are anyways number format में आते हैं. So 23rd April 2018 was the first date I would have invested in some stock. मैं क्या करूंगा, मैं ये देखूंगा, and what benchmark should I take for this portfolio, because I've invested in small caps, large cap, mid cap, so I will take BSE 500 or NSE 500. I won't take NSE 50. Currently my account still is like holding 83% large cap, but eventually मैंने हर type के stock, this is a kind of agnostic market, sector agnostic, market cap agnostic portfolio. So I will take NSE 500 cut benchmark. Let's say what NSE 500 was on 23rd April 2018. So I again go back to, I open Google or whatever, and I'll type in NSE 500. Okay, so this is I want to see a 5-year data. So 24th April 2018 ko that was somewhere around close was 9390. So 9390 became 15244. So let's calculate here only 15244 today, and started off as 9390. Now what is the CAGR? CAGR can be easily calculated. We learned over there. Final upon initial to the power year frac. Now what year frac would be? I can calculate it in the formula itself. Year frac of starting value, comma, today's value, which is today's date, 16 September 2022. And it should give me sorry, 1 divided by, I did not multiply. So 69% तो नहीं हो सकता है. So just let me calculate the year frac separately. Year frac, start date is 23rd April, end date is 16 September 2022. This is the year frac, and my returns would be, CAGR would be final minus initial divided by initial to the power 1 divided by year frac minus 1. So 11.64% is the CAGR. So if I had bought and hold kind of a strategy, if I had applied, I would have got 11.65%, but I have made some 26, 27%, whatever it was. Now, the alternative could be that you would have said that, yeah, why should I see that buy and hold strategy? Because I kept on earning, kept on investing more and more. So other alternative, it's a very tedious alternative, is to go to each of these dates and look at what BSE or NSE 500 index value was. And इसी तरह जैसे हमने पूरा stock portfolio का XIRR निकाला है, हम index का XIRR भी निकाल सकते हैं. Obviously, you don't need to calculate it for each and every stock in each every price. it can only be the NSE value on these dates. So whenever the input, and you can assume like 100 rupees investment into NSE 500, just hypothetically, or even a lakh rupees or whatever, and then calculate how many units of NSE 500 you would have got. And उन dates को अगर हम same calculate करते तो हमको एक return मिल जाता, but that's a very tedious process. No need to do that. I think buy and hold strategy versus your portfolio returns would be a good benchmark. And eventually, anyways, if you can find out that yaar 4 saal mein you have given 26.12% when the index has given 12%, is a massive outperformance. So guys, I hope this example, this thing would have, kind of helped you a bit. थोड़ा सा calculate करो, मेहनत लगेगी. But I really enjoy, updating the sheet. So my sheet is a pretty larger than this because these are very few stocks. I used to do a lot of trading in 2020 amidst the lockdown. So then intraday and, kind of weekly or even 2 weeks stock book karna because the market was going crazily up. So I've just, kind of consolidated it to very few stocks so that you could understand how I have been, kind of tracking my entire portfolio. And some numbers I have put in some dummy account as well. So actually, to be honest, I never bought Bandhan Bank. I just put it as an example. So now let me go to the chat and read about all the chats. Okay, so what happens after I read a chat, after I keep on speaking, is that a lot of questions I don't see a sense as to. Mayank Garuda is asked why positive. I have no clue, Mayank, why you asked that. If you can ask again, I can answer it. Tanvi has asked me in a direct message, why have you chosen 5% as a guesstimate? Tanvi, I could have chosen 10. I could have chosen 2. It's upon me. Just randomly, 5% came into mind. It's a guesstimate. So even if you don't put any number over there in XIRR, it's okay. But many times what happens, that whenever there is a minus calculation, then obviously it gives an error, hash num error. So if it is giving you hash num error, just try putting a guesstimate as a minus 5% or a 5% or whatever. And if you still get hash num, then probably you have made a mistake. Otherwise, it was just a guesstimate problem. Any simpler way of investing in direct mutual funds through a portal without any commission outflow? It may become cumbersome to track individual direct MF investments after a period of time. Nitish, actually, it does not become if you are very, kind of, if you make it into habit that you will update that sheet every end of the month or something. I know it is cumbersome, but what I do is that if I am doing it fortnightly or weekly, I will just look at my emails. My email में कहीं ना कहीं वो आता है data. तो मैं अपने last एक हफ्ते की email देखता हूँ, उसमें 2-3 SIPs होती हैं. Or other than that, I know what SIPs are going every week, So I know that कहीं ना कहीं से मुझे अगर Axis Mid Cap में मेरा हर weekly Monday को data जा रहा है, तो every Monday there has to be a row into that kind of thing. Otherwise, you just ask any simpler way of investing in direct MS. See, you can invest through Coin and Grow and all those, but recent regulations have actually made it difficult to invest directly through these portals. So I guess either invest through regular if you want ease, or you can invest through the kotakmf.com, ICICIProMF.com, and blah, 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 all these things. Okay, I use ET Money. Yes, ET Money is also great. I don't know why, if it also continues to, kind of provides that ease of investment, because what recent regulations was that they cannot pull out money for your mutual fund investment, I mean, Zerodha and all, or coin, you can say, from your ledger. So you need to do a UPI manually. So that manual process defeats all the purpose of ease of investing into SIPs. Okay, I use Mint. The XIRR given by them is reliable, or there may be some loopholes. So Sumit, see, reliable can only be when the website has all the data depending upon the dates, the investment value and everything. If you have given that kind of a provision to any website, then obviously they will calculate the right data. If you give me all the dates you have invested into, the values and everything, I can calculate the XIRR and give it to you, But how often would you think that, okay, SIPs, I understand that can be automated every Monday or every 1st of the month, every 10th of the month, it is going. But what about the stocks? How are you going to accumulate or to account for the stocks? Yes, Zerodha might be doing for you, but I have 3 different brokerage accounts, for example. One for my core portfolio, one for my satellite portfolio, maybe one for my intraday trading. Then how will you account? So you need to have some view which kind of everything is consolidated into one. For me, Excel does the best job, and I don't want to share my all these data with one another because I'm not just very comfortable, honestly. Truly appreciate sharing your personal tool here. I don't think anybody. Yeah, Sumit, I mean, I have not seen, so I just thought, why can't you? So people will make it paid and everything. So I think if this help you, that makes my day. Jatin is saying if there is any bonus split, then we have to edit all the entries. Very good, Jatin. Yes. IEX, for example, I was holding IEX and IEX had 1:3 ka split, 1:2 ka split. So I had to just do nothing, but I knew that split and divided by 3. All entries just, kind of adjusted at one go and multiply by the number of units. So it was very easy. So I think if you just become habitual of updating the sheet now, after 5 or 6 weeks or 5 or 6 fortnights or monthly, whatever, 5 or 6 attempts, it becomes very easy for you to actually replicate this. Jatin asked me this in a direct message, so I'm just saying. Kunal is saying, sir, what was the 574,000 amount you showed in the sheet at the end? Kunal, that was the total current value from all the stocks I was currently holding. So any stock which I am holding, number of units into the current price, and then the sum of it. Lukesh, thanks for sharing. Prashant, is there any difference between IRR and XIRR? So Prashant, what happens is IRR generally will, kind of not take into account any intermediate outflow, inflow, this and that. Generally, IRR is a simplified version where it will take you initial outflow and then the subsequent inflows and give you the value. Eventually, it's the same thing, but the way this is calculated, XIRR makes it more simpler to calculate if there are intermittent cash flows and, kind of outflows and inflows. If investment tenure is below 1 year, do we need to consider ROI or XIRR? Pawan, very good question. If investment tenure is below 1 year, then XIRR will make sense. CAGR won't make sense. But ROI is the best. ROI or the absolute returns is the best which you can take. Because if, let's say it's a period, and sometimes what happens even in the XIRR, let's say I had started investing in an SIP 2 months back and initial market just went up. So my XIRR currently shows me somewhere around 100%, 150%, which makes very less sense. So I think for anything which is less than 1 year, absolute returns might hold more sense. And this is where when I initially said that I'll compare absolute returns with CAGR, XIRR, I missed the point that wherever the investment horizon is 1 year lesser than that, absolute returns is a thing which you should probably look at. Sarthak, so all are asking me direct questions. Guys, don't ask me direct questions. No. So that everybody can look at it. Does XIRR works for loan as well? Lump sum withdrawal at first, repaid EMI. Can I calculate net interest paid using XIRR? Yes, Prashant, formula stays the same. So it's nothing regarding the investment into stocks and mutual fund. For any kind of this kind of calculation, you can use XIRR formula. Which platform do you use to automate STP, SIP? I use direct fund zone, direct websites, kotakmf.com, ICICIProMF.com, SBIMF.com. So I never use other websites now. Thanks, Vaibhav. Okay, so I think I have covered not many questions today. One last thing which I actually missed showing was back to the summary sheet. So summary sheet, anyways, I had explained the right part initially in my last asset allocation thing. So guys, let's just look at it. So what I'm doing over here is, if you just be with me. So I know people are just leaving. Just be with me for 5 more minutes. Just look at this formula, indirect. What does that mean? So this is pretty interesting concept. What I have done is that if you just look at this formula, it says indirect, then some colon, then B5, which is excess liquid, and then D50. What does that mean? If I want to pull out 180,104. So let's say if I need to pull out this number to my home sheet, either what I can do is that I can go and do this equal to, and then go to excess liquid. But I know that in each D150, this number is there, which I need. So what it does is I have actually, kind of linked this cell to this one. Indirect will actually take the name of this sheet. So this sheet is called excess liquid. Let's say if I rename this to excess liquid 1, then that number will show me error, because there's no excess liquid 1. So here I need to rename it to the same thing which I have renamed it there. Sorry, there's no space over there. So all these things have to be considered. See, now it gives me 180,104. Means just have the proper, kind of naming over here, and then exact same name over there, and then easy link can be made to this tab. So I just have to do nothing, but I just make this formula for 1, and then I just drag it. And all these investment value comes from this sheet to the summary sheet. Then I just invest this latest NAV, which I told you that I invest manually. Total units, again, indirect function, because total units I have calculated, I showed you in that F row. So this is the F row, 81.28. So this number is pulled out, and total value is nothing but this into this. This value can also be pulled from that sheet, but because kind of computations also take time when you are referencing to different sheets, just calculate it over here only, because both the numbers have been anyways pulled. XIRR can be pulled again from the same sheet, And then I have, kind of made some columns as to which AMC it belongs, what type of fund, debt or equity or alternative it is, and then subtype. And then I've made this summary sheet so that I know at each point of time that what my current holdings are and how much percentage is into equities and debt and gold maybe. So if I pull all the numbers from these sheets, so I can see that, okay, total debt I have is 14.6%. Total equity I have, including stocks, I have 75.9. Gold I have 5.8, and I have 2 lakh cash holdings, which is obviously coming from a hard-coded number. And total value today for this portfolio, I have invested 35,86,000. Total is 5292. Now the point is, if you are asking me overall basis se apna XIRR batao, to be very honest, you can do because you know how the concept runs, but then you have to, kind of all these different sheets, un sabko ek sheet mein lana padega, and then you need to calculate accordingly same way, which is a very, very cumbersome number. So what you can do is you can calculate a kind of sum product. I mean, this is not the exact XIRR, but I will say that, okay, what you can do is total value wala column le lo. It will give you a slight, kind of, okay, this multiplied by the XIRR. This gives you total value. This has to be some product divided by this entire thing divided by total investment value as of now, which is can be calculated, although वहां पे निकाला हुआ है, but total value ही आएगा ना ये पूरा. Percentage becomes, so total XIRR of my entire portfolio, not exact XIRR again I'm saying, but kind of a approximation is 20.79% overall, which is very good na. अच्छा है ना, 21% returns for this dummy portfolio. I just wish it was my real portfolio. Anyways, okay, so one more chat. Question. So below 1 year, we can consider ROI. Above 1 year, it is XIRR. 3 to 5 years CAGR. Pawan, no. CAGR only when there is a lump sum investment. So point to point. If there is no point to point, if there are intermittent cash flows, then XIRR only, no CAGR. Below 1 year, ROI, true. Above 1 year, if there are SIP or these kind of cash flows, then XIRR. If there is a lump sum investment, कि आप 2 लाख डाल दिया, 4 साल बाद निकाल लिया, तो वो CAGR ठीक है, if there are no intermittent cash flows. But no CAGR if there are. Thanks. XIRR works for loan, the lump sum amount. Okay. Can I include the interest in XIRR calculation, loan amount and EMI to check whether loan is worthy or not? Yes, Prashant, why not? You should do this. I mean, any intermittent cash flows, as I said, see, basic definition wahi hai. Chahe interest hai, chahe principal hai. Even if you are getting dividends out of these stock can be added back, and on what date you are getting dividends. So one caveat over there in this sheet is that I have not calculated dividend. I mean, if I can, compare this one, something which is called a benchmark, made TRI, total return index. You should always use total return index, but it was too cumbersome to actually account for the dividends also. So इतना तो मैं human error लेके चलूंगा. But if you want to include these intermittent cash flows, then you should do in the XIRR. Could you please remove the filter from summary sheet to see the headings? So sorry, guys. Okay. Okay. So these are the. Okay. Any more questions, guys? Happy to answer. I hope this will be helpful. Do look at the recording because I know एक बार में तो नहीं समझ में आएगा. You'll keep on looking at numbers and everything. I've just shared my entire, kind of real model, which I generally don't show anybody. But ठीक है. I'll put it on YouTube by tonight, so you can look at it. So Abhi, I'm leaving. See you in next session. Most likely I'll cover debt part in the subsequent session somewhere in October. I'll update you guys. Chalo, see you. Bye bye. Thanks, guys. Thank you.